What is going on, everybody? Trying a little bit of a different format for these videos, so please let me know if you like it in the comments. But welcome back. In this video, we are going to be doing our top stocks to watch for this upcoming week of July 11th. And to start off this video, we are going over our macroeconomic data for the upcoming week, in which we have our news starting off on Wednesday this week with CPI data and core CPI data at 8:30 a.m. Thursday, we have PPI numbers coming out for the US, and that is at 8:30 a.m. as well. Friday, 8:30 a.m., we have core retail sales and retail sales. And then at 10 a.m., we have prelim UOM consumer sentiment numbers coming out. So in terms of macroeconomic data during market hours, you don't have to worry about anything until Friday at 10 a.m. That being said, there should definitely be some shaky pre-market data coming out on Wednesday and Thursday, and maybe Friday as well. So as you can see on screen right now is our earnings in the S&P 500 for this upcoming week. So taking us over to our charts, we're going to be looking first at SPY. In SPY, as of this last week and a half back, we've been moving straight up. We've been having a very bullish impulse wave to the upside, and this does show me that our theory that we were talking about in last week's episode of a larger ABC correction playing out is indeed playing out. And just to quickly recap what that means, it means that we had a 5-wave move in the Elliott wave framework to the downside. If you're not familiar with Elliott wave framework, be sure to go check out the other videos on the channel that go over it, as it's a little bit more of a detailed explanation than we can fit in this video. But for the people that are familiar, we had a 5-wave move to the downside on SPY, making our wave 5 low at 362.19. That is also where we started to see this possible correction play out. In the Elliott wave theory, there is two types of corrections, a flat and a zigzag, and we have a very clear zigzag correction playing out right here. It could potentially be a flat as well if we do find a high around this level. Absolutely possible. It does appear to be more of a zigzag as of right now, but again, we will have to see when price data comes out. In wave C, I did identify a 5-wave move that we are currently playing out in, and that is why it appears to be a zigzag in my opinion. But as you can see here, we are looking to make our wave 5 push to the upside in this early next week. So I'm looking for, at least in the beginning of this week, some bullish price action out of SPY. And then should we get up to 396, 401, especially once we get up to those levels, I would start to be getting very bearish and thinking that we will then see the continuation to the downside. If we get above our dynamic support and resistance here at 408.32, then I'll have to reanalyze what we're doing. It could just be continued bullish price action, but we will have to wait and see. As of right now, it does look more reactionary or counter trend, meaning we are going to continue that trend to the downside. So looking at QQQ here, QQQ is in a very similar situation and is already at the extreme of being a flat, so the other kind of correction. A flat just means that we find a high around our prior high, the wave A in this correction. So we could find a high here, perhaps. It does appear to me, we do have a 5-wave move playing out here, so we will most likely see wave C. Again, the same thing on SPY. Some bullish price action in the beginning of the week, then perhaps some bearish price action in the next week or later half of this week. Looking at Apple, Apple is already well past its flat correction high. It would have been a high around here at 143.62. So right now, we are definitely completing a zigzag for Apple. Again, the same exact pattern we were looking at on SPY and QQQ. But as of right now, I'll be looking for some Apple puts around the levels of 148.50 to 151. Taking a look at Tesla, Tesla is still in this macro consolidation range. As you can see when we go to the higher time frames, around the levels of 787 to 624. So we could very easily come back up to retest this high at 780 and then come lower. That seems likely as of right now. Until we get above this resistance, it's going to look bearish, right? But if we do close a candle above this resistance, 792, that would be quite bullish. And then if we do break above that point, we could expect to push back up to this resistance here at 878 flat. So yeah, look out for that resistance high of 786, 787 on Tesla. That'll give us a pretty good idea of where we're going in this next week. As of right now, it definitely does look more bearish than bullish. Exxon, I think there's going to be a huge move out of oil. I've been talking about this quite a bit, almost every single video now. Oil did get below the $100 level, breaking beneath some macro support here via this trend line channel that we have. It looks like it is going to be retesting it and potentially coming back down, but we do have some very strong support here rather at 93.20. So we do need to get below 93.20 or 92.50 for us to be confident that we're going to move lower in oil. At that point, I will be looking to get shorts. I'm going to look to be potentially scaling into some shorts around this level on oil. Should we get a confirmation, right? So what I'm looking for there is like a bearish engulfing candlestick to bounce off of this zone here. That would give us a good idea. I would be looking to get some Exxon puts or Oxy puts at that time as well. But again, the reason oil is so interesting right now is because since we bounced off of this very strong support, we very easily could fake out and come right back up, in which case Chevron is presenting a very unique long opportunity on this broadening pattern. So again, looking for a very similar thing, a bullish engulfing candlestick to the upside. That would be a fantastic trigger for this trade. Either way, right now, oil is presenting a really good opportunity in either direction. You just need to be ready to, spot which way we're going to move. And I kind of hopefully just gave you what you need to reference that. So again, if we're going to bounce from this level, I'm looking to get puts on energy stocks. And if we break through this level and fake out, I'm looking to get calls on energy stocks. Again, longs would be on Oxy, Chevron in particular. Puts would be on Exxon and Oxy as well, perhaps. Yeah. So going into AMD, we did break through our first take profit zone that we had here at 80.40. That was the extreme. We're now retesting it, and it looks like we're having some issues at that level. So I'm expecting us to come lower in AMD, which would again line up with most things we've been looking at. But AMD's been getting hit especially hard, as you can tell, completely uncorrelated with tech stocks. If we pulled up a Apple or Google comparison on this chart, you would see they've been going straight up and AMD's been essentially coming straight down. But I am looking for AMD to eventually make a move to the $60 range before we find a low in the S&P 500. So for this week, I'm looking for perhaps a bounce off of this level. Maybe we come back into this zone. It wouldn't surprise me. As long as we don't get above this zone, I think that it makes sense to continue to the downside. So that was all for our top stocks to watch for the week of July 11th. I hope you guys enjoyed. I hope you guys pulled some value out of it. If you did like the new format of this video, it was just trying to be a little bit more straightforward, just get the data across rather than me be in your face. So let me know how you liked it in the comments. Really appreciate the info. And as always, we will see you in the next video. Happy trading.